There's a lot of excitement around Infosys in the market. Every analyst report that I've read in recent weeks has been speaking about how the company is effected a turnaround of sorts, how the near-term demand and visibility is positive. So take us through what you see at this point.
Hi, Chandra. Thank you for having me. What we're really seeing, as you saw when we announced our first quarter results, is there's a new set of areas that clients are really looking for. What has happened during the crisis, many clients have changed how they're looking at what they need to do for their customers, their clients. And in that, the digital capabilities are getting the most acceleration. Most clients want to go faster on their digital transformation journeys. And that's really the big investments that we've made over the last few years. And we are starting to see more and more connect with the clients on this. In addition to that, there is more interest in automation because clients are also looking for efficiency in how their IT landscape is being executed. And then finally, there is more and more need for consolidation. One of the things that happened as the crisis started to become more real for all of us in the middle second half of March, we started to have extreme focus on employees and then on employees working from home. In doing that, we were able to very quickly move to a safe environment for employees and really delivering service for our clients well. And that has resulted in more discussions on how several of our clients want to consolidate from some of their vendors to look at Infosys more. So those are the three things that are happening more and more as we look into the environment today.
Right. Salil, remember in the middle of last quarter when we spoke to you just ahead of your results, you painted an optimistic picture that, there had been no large cancellation of projects, no drop in pricing, and that really played out in your first quarter numbers. You reinstated your revenue guidance. When you look at things now, almost at the end of the second quarter, are you more optimistic than before? Can we even see you raising that revenue guidance from to even above 2%? What can we expect at this point?
So there, Chandra, as we've gone through this quarter, every month that really we've gone through since the end of March, we've seen steady improvement in how we're engaging with clients and also in some of the areas of demand. For example, we know that sectors like high-tech, telecommunications, life sciences, and even financial services were in fairly good condition as we went through the first quarter. We are now seeing sectors which were more impacted like retail and manufacturing slowly coming back. They're not at the same levels as they were before, but they're definitely improving steadily month upon month.
Right. This has been 5 quarters of outperformance for you, Salil. Can we expect a 6th quarter of outperformance on the revenue numbers, a double hat trick from you perhaps?
There we'll wait and see. We'll find out soon enough. I think our focus has really always been on what our clients are looking for. How do we make sure that their expectations are met? And that's the main objective we have. Everything else that sort of happens along the way. As long as we're meeting our clients' objectives and then ensuring that our employees are getting a safe environment and good career prospects.
Right. You're not in your silent period yet, so you can give us some forward-looking statements, Salil. You can give us a few headlines on what to expect next month.
We will very soon be entering the end of the quarter, so you will start to see that. As I was sharing, we've seen certainly steady improvement in some of the sectors like retail and manufacturing. We've seen a lot of efficiency overall in the business, in the way that we managed the cost structures. And we see that the demand is strong on the digital side. We see demand is strong on the automation side. Outside of that, specifically in terms of numbers, Chandra, unfortunately, we will only see that once we finish the quarter.
Right, but you've given us enough hints there because I remember last quarter, same time, retail manufacturing were the problem areas, but it's good news if those are seeing the first signs of a turnaround. Salil, the other important part that I wanted to chat with you about was, I remember when you took charge in 2018, sometime around April 2018, you said that you would need 3 years to transform Infosys. The first year would be about stability and investment. The second year would be about momentum, and the third year would be about acceleration. Is it safe to assume that Infosys is now in the acceleration phase? I mean, there are a few indicators. If I look at your demand pipeline, the large deals, the transformational deals that you're winning, the way you're doubling down on headcount in the US, the acquisitions that you're making. So is it safe to assume that the transformation is complete, that Infosys is perhaps back to becoming the bellwether of the IT sector?
So there, in terms of how we looked at the main focus in terms of acceleration, we already saw in the last financial year that ended in March, we had a growth of 9.8%. In the year before that, we had a growth of 9%. So we had started to actually move with that sort of an acceleration already in that second year in the last financial year. I think with the situation worldwide in terms of the economy and the medical crisis, we feel that we've done an extremely good job of staying even more relevant to what our clients need. And in many ways, the first phase of that transformation is behind us. However, this is an ongoing journey. What I mean is we have to every day ensure that we remain relevant to what our clients are looking for. In that, we continue with our digital acquisitions, we continue with our digital investments. You might have seen a few weeks ago, we launched a very new effort on cloud. It's Infosys Cobalt, where all of our cloud capabilities are built together for the benefit of our clients, for accelerating the cloud journey and for reducing the risk. So within Cobalt, we've got 200 industry solutions, 14,000 cloud assets. So that's another part of our transformation journey. We've also announced this morning an acquisition. We announced an acquisition a few weeks ago. These are different pieces of our digital pentagon that we continue to invest in. But we are very comfortable in that we are more and more relevant for our clients, but it's not a journey that stops. It's an ongoing activity for us.
Right. Salil, if you have to pick a few areas that have particularly worked for you, you've invested in the digital pentagon, so to speak. You've realigned your sales. You've also focused on reskilling and localization. Infosys traditionally has been very comfortable in the change side of the business. You've had a higher exposure to consulting and transformative projects. Has that also helped you in the current phase where clients perhaps are navigating a lot of uncertainty, they are accelerating their spend on digital, and it also comes at a time when competitors such as Cognizant and Wipro have internal issues of their own. So, I mean, is it fair to say that it's perhaps a combination of factors that's worked very well for you in the last few quarters?
Well, absolutely, I think, Chandra. It has been a combination of many factors. Some of the decisions that we've made have been really borne out. For example, the point you made about digital investments, while we were very comfortable that that's where clients were moving to, but in this sort of environment that we're all living in, where everyone is connecting digitally in virtual environments, those investments have been even more beneficial. The fact that we've done reskilling where the vast majority of our employees are reskilling themselves onto new technologies, that's a huge benefit in this environment. So more and more, many of those decisions have helped us, and it's been a combination of several factors that is giving us good momentum today.
Right. And in terms of the large deal pipeline, you announced Vanguard in July, which is the biggest deal in Infy's history. Now, some analysts are pegging this at $1.5 billion, which is massive. Salil, does this mean that, these billion-dollar deals are back on the table? And is Vanguard perhaps the first of many such deals that we can see from Infosys? Because I think the Vanguard deal itself took over a year for you to close. So, are there more deals like this in the pipeline? Which sectors will they come from?
So there, we are of course delighted with the digital transformation partnership with Vanguard. We think that there will be more and more such partnerships with different large enterprises in US and Europe. I think there are different sectors that are going through change. You look at change, for example, more in financial services on the banking side. There are other change elements that are going on in life sciences and pharmaceuticals. There are some change elements that are going on in the telecommunications sector. So my sense is through different industries, some of these large transformation partnerships will emerge. We feel we have a good pipeline of these looking ahead. The thing to watch out for is you don't know at what pace they come. I've shared this before, that typically large partnerships are more lumpy. They're not steady, but we have a good pipeline, and I feel comfortable we'll see more of these in the future.
Right. And in terms of the conversation with clients now, in terms of, new deals, what kind of deals are these? Are these for core services? Are they for transformation services? What are the kind of conversations that clients are having at this point? I mean, is there more certainty now? Are they willing to invest and spend? And in what areas? Is it their existing core services or in transformational services?
So there, Chandra, there's definitely a good interest, a different interest in different industries, but overall a good interest for the services that we are offering. One is clients are looking to do transformation or accelerate their digital journey. So a lot of discussions in the cloud space. Second, it's more and more on automation, efficiency. How can we do more for less? So really very efficient on the cost. And there again, we have a lot of investments in automation, in AI, which are helping us. And the third, there's some talk early days of consolidation where clients are looking at us to see that we've helped them quite well during the crisis, making sure that all the service delivery was going on, and yet making sure that it's all safe for our employees, having 99% of the work delivered from working from home. So those are the sorts of areas that we're seeing more traction in. And we see that activity level is also inching up in that the pipeline is looking larger and larger.
Right. Salil, analysts I've been speaking to say that, while pricing and volumes are coming under pressure in core services, it's not the case at all on the transformation side, that clients are not really pressing the panic button or the pressure button there in terms of pricing or volumes. Is that something that you're seeing as well?
I think that's broadly true, Chandra. I think we see overall the pricing seem to be quite stable at this stage. There have been one or two or a handful of discussions on pricing, but it's not something which, given the type of economic crisis stemming from the medical situation, one could have expected. So in that sense, it's better than what was expected.
Okay, right. Also, in terms of the deals, Salil, how many of these are renewals? Like, are these existing deals that are perhaps getting renewed for two years, 3 years? Are they fresh projects from clients? Can you give us a little color there?
So there, the mix within our pipeline is even. What I mean is there are a sufficient number of large net new deals, and internally we have a specific tracking for that. And then there are several which are also for renewals of contracts, which typically would entail some expansion of scope. So we see a mix of both of those at this stage. It's not one or the other.
Right. One metric that perhaps people are concerned about is your operating margin. From FY17 to FY20, your operating margins in dollars grew by 2.3% annually. So is growth coming at the cost of margins? Do some of these big projects entail upfront investment? And it's been trending downwards, even your EBIT margin targets for the last 3 years. When do you see this stabilizing? When do you see some of these investments perhaps pay off for you on the margin front?
So there on the margin, as you saw in the first quarter, we had a very robust margin at 22.7. We've given a guidance of margin between 21 and 23. It's the same range of margin guidance we'd given for the last financial year. And we feel as we go through this year, and especially by being careful on how we're looking at costs in a changed global macro environment, we'll be even more robust with our margins. So I feel comfortable that in that sense, the investments we made in the first couple of years when I started are behind us. We are now working with this margin guidance band, which is 21 to 23%, and all of the activities we're doing for building capabilities, reskilling, come from this operating margin band. It's not any extra investments that we're looking for.
Right. Salil, one question that I'm certain every Infosian would want to know from you. When are you announcing promotions and salary hikes? What percentage of employees will be eligible and at what levels?
So there again, one of the things we did in the first quarter was we had, because of really the hard work and the dedication of all of the employees, an extremely high variable number. We will continue with that approach in terms of looking at what are the things that make sense. We've already internally started to take some decisions for different levels of employees within the company, of promotions and of changes on salary. All of that will be looked at through this year as the economic environment around us, both worldwide and in India, starts to see improvement. We want to make sure it's done in conjunction with that so that all of the employees' hard work and efforts are also rewarded.
So can we see these discussions reach fruition sometime towards the end of this quarter, Salil, in terms of the decisions you make on this front, promotions and salary hikes?
All of those will be looked at carefully at the end of each quarter, and some groups of people will start to see the results of that. I don't have a view to say something for the end of this quarter specifically, Chandra, but we are absolutely looking at that to make sure the same way that we are looking after the interests of our clients by serving them well, we want to make sure that all of the employee interests, including how we did the variable in the first quarter, will be dealt with in the best possible way.
Right. Salil, a question on the recent announcement you made on US hiring. You're going to double this, ramp this up significantly to 25,000 people in the US by 2022. I have two questions on this. The timing, it's coming just 2 months ahead of the US presidential elections. It's also coming at a time when we've seen a major pushback on work visas in the US. There's a suspension on work visas till the end of the year. So, is this an effort to sort of make Infosys a visa independent company, irrespective of who comes to power in the US? And secondly, Salil, in terms of the cost implications, traditionally there's been a wage arbitrage for employees in India vis-a-vis, those who work on site. So what kind of cost implications is this going to have for you going forward?
So there, Chandra, the thinking for us is we'd announced a few years ago the recruitment of 10,000 US employees. We actually overshot that and we were at 13,000. And given that that was working well and that we had more and more work within the US for the future, we decided to expand on that announcement and announce the 12,000 additional. Having said that, we are recruiting still massively in other parts of the world, as also massively within India. And all of that recruitment goes on. What we now see going ahead is recruitment in many of our different geographies, in addition to large recruitment in India. In terms of the cost, we've built a business model and an economic model. Sorry, in terms of the cost that you asked, the second part, we built a business model and an economic model which creates a full pyramid recruitment from college level all the way up to senior levels in many other geographies outside of India. And we think that's a model that will work efficiently for us for the sorts of things that we're doing with clients that are focused on digital transformation, that are focused on automation. And we believe that that's what's going to help us maintain, sustain our margin quite efficiently.
Right. Salil, will this have an impact on the numbers that you hire in India? Because, if I look at the first quarter, almost all companies reported a sequential decline in headcount. For this quarter, while you're honoring all offers that were given already by Infosys, has fresh hiring picked up? Have you started doing this? Take us through that.
So in the first quarter, we still had a large number of new hires, over 5,000. In this quarter, we also have a large number of new hires. This is in India and outside India, and we will continue with that. We already have a program where we will start to look towards the second half of the year as we plan for the next financial year for the college graduates from India. So our plan is to not have anything change in the recruitment. We'll of course look at how demand is coming about and what are the requirements that we have moving ahead. The recruitment in India will also go on, and we also have a longer term plan to recruit selectively within US and Europe.
Right. And a word on the acquisitions. You announced in 2 weeks. Last week we had Kaleidoscope. Today you announced Guide Vision. Both of these were, sub $50 million tuck under acquisitions, so to speak, in niche capabilities. Is that going to be your strategy going forward, or will you also look at slightly bigger acquisitions, perhaps in emerging areas such as SaaS or companies that have API platforms? Just want to understand your acquisition strategy, Salil.
So there, I think, as you shared, we'll absolutely do these very specific, focused acquisitions. They are in the area of cloud, in engineering services, medical devices. We've done some others in SaaS a few months ago. The thinking going ahead is those will continue. We are also looking at acquisitions, as you mentioned, which are larger in size and scale. As and when some of those become relevant all of the parameters, whether it's the cultural fit, the price, the strategic rationale, when all of those sort of meet up, we will go for those as well. There is no restriction from our side on the size, if you will.
Right. Finally, Salil, how helpful has it been for you having Nandan Nilekani as chairman? He's not just the co-founder, he's also a globally respected and known technocrat. I remember a year ago you had said that you talk to him every other day. Has the frequency of engagement increased now because of this unprecedented situation? Is he perhaps closely involved in strategy or key clients? Take us through that.
I think it's incredible to have Nandan with us, with me, with the company. He's an incredible visionary, and he spends a lot of time, as much as is needed. Whenever I need some guidance and help, I reach out to him. But he also has a deep knowledge of what's going on in the technology world, how some of these digital transformation journeys are working. So the involvement is really very, very good, very positive. And he also has a clear view on the strategic direction that we should take as a company. So it's fantastic to work with him. But to be clear, it's also really brilliant to work with all of our board members. There's an active engagement. There are many ideas that are discussed with different board members, and all of them are, I find, really helping, guiding, contributing, and many of them interacting on different committees. So I find the whole connect is really extremely positive.
Right. Finally, Salil, if you have to give yourself a score out of 10, what would it be? Analysts, I think, will give you 11 out of 10 at this point, going by the reports I've been reading in the last few weeks. But what would your score be?
I think difficult to give a number. To me, really, the journey is always looking ahead. For us, we have an incredible foundation of this company built by the founders. We have a tremendously loyal client base who trust us and a loyal employee base. And we are fortunate, those of us who are involved in the business, to make sure that we can drive it ahead, making it all the time relevant for the clients for the future and driving the digital agenda. So when all of that is done, might be a good time to give scores. But for now, I'm on the journey. So I'm working to make sure we're with our clients.
Right. On that note, Salil, thank you very much for talking to ET Now. It's been a roller coaster of a ride for Infosys, but finally there seems to be stability that's set in, momentum picking up, and as we can see in the last few weeks, a sense of acceleration if you go by multiple parameters, be it deal wins, hiring, acquisitions, growth, and so on. But on that note, thank you very much, Salil. Hopefully I will see you in person in Electronic City in Bangalore, very soon. But take care of yourself, and thank you very much again for giving us time.
Thanks, Chandra, and looking forward to seeing you in Electronic City. Take care.